There's a lot of tension around the market at the moment. The cause of these tensions is genuine enough, though, that there is no need for anyone to panic. Let us explain why. Hey insiders, welcome to our channel, Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos so you can develop your financial knowledge. Make sure you like this video and also subscribe to this channel. This small move from your side will help both of us massively. We at this channel bring forth the latest information at the fastest rate possible so that you and your portfolio never get left behind. Without wasting any more minutes, let us dive straight into it. Before we speak about anything else, what exactly do you think is capital gains? It is the net profit that you as an investor make after selling any capital asset. Note that the sale you make must be above the price at which you bought it. It will only be then that you gain a profit, and therefore only then that you will ever have to hear about the term capital gain tax. That is, the tax payable to Uncle Sam for the profits you make by selling a capital asset. There has been news all around the internet that the new government has plans to increase this capital gain tax that is becoming a very major issue for many crypto and stockholders. If this becomes true, then the amount they will have to pay for each extra dollar they earn, tax will increase proportionately. To avoid such a situation, many people have decided to sell off their holdings, leading to a major value drop in various cryptocurrencies, including Bitcoin. Apart from this, we have been going through a lot more factors that have become bearish to the entire market. These reasons include the liquidations and the China outage. Now that we have the increase in the capital gain taxes, things seem to be going really bearish. However, this bearish pattern was inevitable. The current run where we almost crossed the $60,000 mark had to come down to a bearish end. We have been seeing an extremely extended market for the past couple of months. This has been the case since December 2020, where we saw the start of a bull run to cross the $40,000 mark. We then saw a decline in the prices as they went down to the $27,000 range. The one we have right now is also of a similar nature, and we will see a lot of pullbacks to level the whole run out. Based on what has been happening historically, we do gain a lot of confidence in the manner the charts are looking. What we mean by that is the trend that Bitcoin has set up for the past couple of months. It occasionally has retraced its path back down after creating a higher record. Even though there are chances that this time it might go slightly overboard, compared to how it has been falling earlier, we do not see it's going below the $40,000 mark. This will mean that the upcoming fall will be around $17 to $18 from the current price levels. We say so based on the historical data, that is, how the charts have been moving in the recent past. We spoke about certain causes that have led to a fall in the prices. Even though this news is applicable for all cryptocurrencies, Bitcoin has been really dominant among all others, and by the laws of nature, it will also have to take a huge blow. The Biden administration has been looking forward to developing a cryptocurrency regulation to keep the flow of coins under the control of the government. On a good note, however, unlike many other countries like India and South Korea, which may ban the trade or use of cryptocurrency, the United States of America does not seem to be having any such ideas. This actually will be a huge step for the American government to take because America is one of the countries that have the most investors in the crypto sphere. A ban may lead to a lot of trouble for the administration. However, even though the government has not even spoken of banning them entirely, there will now be a 40% capital gains tax applicable on all holdings, be it short or long term. This is a bit frightening given that a lot of people may be left with nothing after being taxed with such a massive amount. Notwithstanding here, the Biden administration has also clarified that there will be a lot more regulations to keep in control the flow of money and to maintain the stability of the economy. This is the news that had led to a lot of bearish tendencies, especially as the massive tax rode into the play. Therefore, the pace at which Bitcoin had been traveling has come to a halt that we all could easily expect could happen anytime. The current strike has been going on from around the middle of March and touched the $63,000 mark around the 13th of April 2021. It is not possible for the prices to keep gaining momentum forever, and we were to see a recession anyways. This recession is therefore of such nature. With the comparable lower lows that we currently are at, we do expect a bounce back at the $40,000 levels. A price below that is unlikely to happen through the current recession. The move that we currently have can be looked at as to be a pullback after the current ascending patterns. We do not expect this to be a major concern for the investors, and we do believe that this will consolidate much before the $40,000 range to gain back once again an increase in price. The increasing bearish pressure from the $60,000 mark has been sustaining for a couple of weeks. This is another reason why we feel that a fall was pretty much expected and nothing that will harm Bitcoin as a whole. Let us try bringing in a bit more relatability into the whole scenario. Back in the 2017 bull run, we did see the prices taking support of the same 26 periods moving average as we think it will this time, around the $40,000 mark. The prices touched the mark multiple times before gaining momentum and shooting across the charts. In the same bull rally, we saw the same being tested multiple times. This is a positive indication of what we feel could happen this time as well. If this is the case, then we can see the prices shooting all the way back to overshoot the $60,000 mark. Back then, the support it received from the levels raised the prices to an all-time level, but then the prices did consolidate a bit lower to rise back up. This formation of a rising M shape on charts has been very common for a long time for Bitcoin, and even this time the rising M seems to have risen yet again. Yet again, a similar small recession was seen last year in August, even though based on the then prices, it was not as substantial as it is today. The overbought nature of the market has even ensured that the charts do not touch the estimated 12 lower lows. This being the case, it was imperative for the market to consolidate a bit because continued uncontrolled growth is not a possibility at all. We did see a closing resistance at around $40,000 that becomes the reason why we feel that the same resistance will also become the support for this fall. If we are able to establish this support at the $40,000 mark, then we can see a much more sustainable long-term growth for Bitcoin. A growth vertical or steep in nature will just consolidate sometime in the future as it did right now. While we say that, we do not rule out the possibilities of Bitcoin being able to bounce back much before the support of the $40,000 mark. The current oversold conditions will affect the market really badly. This is because of the panicking that has been noticed after the announcement of all the bearish news that we mentioned earlier. Investors tend to play it safe many times as they hear such things about the market, and it is completely natural to occur. Of course, no one likes to lose hard-earned money. Having said that, there is one thing that must be kept in mind while we speak about the overselling. It is the chance that it has to really destabilize the entire market. The investors must read within the lines and look at the entire situation on a long-term basis. It is imperative for them to look at the historical data present and then decide about the things that could happen with any cryptocurrency. We have been pulling back for around 10 days, and since then, the prices haven't been looking that bad. Even when the prices were seeing a recession, we noticed 2 minimal bullish days that were indicative of the chances of this bouncing back. These indicators do line up perfectly in the long-term basis, and is exactly why famous people like Peter Lynch and Warren Buffett have been so consistent about investing on a long-term basis. What are your thoughts on it? Let us know in the comment section below. We hope you liked the video. If you did, leave a like for this video. Thank you for watching, and make sure to subscribe and check out our other valuable videos. See you soon at Financial Insights.